investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Happy Tuesday before Thanksgiving here on the Financial Exchange. We've got the government reopens, so data starting to flow again. We've got some information on retail sales to go through. We're going to be talking Google and semiconductors, Alphabet and their semiconductor business and what seems to be getting some attention. And then we're also going to be talking about the tried and true method of controlling prices, which would be, or bringing down prices, which would be rent control, because we know how well that one works. And apparently need to retest that here in Massachusetts. So first things first, though, Mike, Paul, and Tucker with you here on the Tuesday ahead of the holiday. Markets mixed as we open up here. Dow in positive territory, S&P and NASDAQ in negative territory. We've had a volatile few weeks here, and so I think investors are a bit on edge here, even as we head into the holidays, wondering about this AI trade, and we'll be talking about that some more later in the program. But I want to start off with retail sales. They have been, paused the data for it for a while, and the data that we're getting now, again, we have to just acknowledge here and stress that this is data for September. It is 2 months old now. It is not the most useful statistic that we can use to try and garner how people are feeling about the economy, but one thing you can say is that trends oftentimes continue themselves, and so what we saw in September could continue through October and November, perhaps. But taking a look at this report here, again, this tries to measure how much people are spending and what they are spending it on. We did see a very modest increase for retail sales in the month of September. They increased on a month-over-month basis at 0.16%. That comes off the heels of an August increase of 0.6%, and July was about the same. So a pretty significant slowdown. We did see a lot of that coming from gas stations, personal care stores, miscellaneous retailers as well. Motor vehicle sales fell for the first time in 4 months, which maybe somewhat notable here. Maybe that's going to peak back up, though, in the holiday car shopping season. What else did you take away from this report, Paul, in terms of American spending activities?
It's hard, Mike, going back to September, and I've spent the last 30 seconds just thinking about the Earth, Wind, and Fire song. Do you remember the 21st of September? That's been bouncing around my mind. I'm just not sure how much weight we should put into this, like you said, just because it is so backward looking. The numbers pale in comparison to some of the prior months, but we sit really in the holiday shopping season right now, and this is data that goes back, like we said, to even past the back to school season here. Some of the areas that stuck out to me, you did see a little bit of drop on the appliance and electronics side of things, about a 0.5% drop there. Clothing dropped, and you saw some declines as well in sporting goods, hobby, musical instruments, and bookstores. But overall, as a whole, it is sort of just yesterday's news. Really, we now turn our focus much more, and we'll get into this in just a second here, in terms of inflation in the labor market. Those really are the two primary concerns. Obviously, the consumer has been holding up its end of the bargain for years now. So it's not like we shouldn't cover this type of data, but the problem with this government shutdown is it is so backward looking that I'm not going to put too much stock into it just yet.
Yeah, thank you to all you retirees who are feeling extra wealthy and paying for first-class plane tickets and family vacations and new cars, because you are keeping this economy afloat here. I think it's worth mentioning, right? When you strip out, we tend to strip out things like gasoline, gas prices fluctuate a lot, and so you strip it out of the numbers. You tend to strip out things like motor vehicle and parts because those are very big ticket items that people are not purchasing every single month. You purchase one every 5 years or so, and for me, maybe closer to 10 to 15, but
that's what I'm shooting for.
Nonetheless, it's a rare purchase that's a big ticket item. So when you strip all those items out, retail sales barely budged in September.
Mm-hmm.
So that's the piece to take away here is we saw a slowdown from the last several months. Is that because sentiment worsened? Is it because I doubt it's because there was a fear of a government shutdown. But is there some reason behind that, or is this just a trend in the data that's going to reverse itself? Because you don't have to go terribly far back to see a similar number in the data. Back in, what was it? Back in May of this year, we saw an 0.8% drop. At that point in time, we were blaming it mainly on tariff fears. Is there something similar to blame it on now? Doesn't really come to mind for me, but could this? Here's who cares about this. Target, Walmart, a bunch of other companies do care about this. They probably have better data on what their consumers are doing than we do, but they're probably looking at this and saying, okay, this is where people cut back in September. Are we going to see this stuff surge again for the holiday shopping season? Or, for instance, are sporting goods stores going to be in tough shape because of this pullback that we are seeing here? One, glimmer of hope here, of good news. Spending on food services and drinking places did increase 0.7%.
Mm-hmm. Yep.
It's not big ticket items, but people are treating themselves a little bit in the month of September. I do like to see that spending on that type of service, and that does go a long way for things. So I think that's a good indication overall.
Yeah, it's hard on the retailers that you mentioned. Their quarterly earnings, which would encompass even more data than this September retails report, was kind of mixed. You saw Walmart had pretty strong success. Target has continued to struggle. That business has really been muddling along for the last year or so. And others, it was just hard to point through as a clear through picture. Home Depot did see a decline in same store sales, mentioning just a weakening market for the real estate sector. So we'll continue to digest more information as it comes out, but just one data point. We don't want to go too far ahead of ourselves here.
Yeah, I will. I'll bring a story that we're going to cover later to the front, though. The Boston Globe's reporting that U.S. consumers plan to cut their Black Friday spending for the first time since 2021. I just don't believe them. I straight up think that they are lying both to the reporters and to themselves. I think that's genuine. I'm not telling folks out there that they genuinely don't think they're going to cut back on their spending, but we see this every year where you go out and you survey consumers on the street and they say, oh, that credit card bill last year was way too much. I'm going to cut it back. And unless they literally lose their job, they don't cut back. So I'm just not buying it.
The only argument I could see is that it feels like Black Friday is not as...
The Black Friday creep.
It's not as special as it once was because these companies spread it out over such an extended period of time. It seems like that perhaps that one day isn't as significant as it used to be.
Yeah, I will admit that perhaps there's been enough Black Friday creep that it's just going to... But that doesn't account for
Cyber Monday. It becomes more of a... extended period of sales.
While I agree, I don't think it's significantly different from last year. And so,
True.
We had Black Friday creep last year. I doubt we're going to see sales drop. And yeah, I don't know. I tend to think that whenever you survey consumers, so the Deloitte survey that they did, they surveyed 1,200 Americans. They found that shoppers plan to spend an average of $622 between Black Friday and Cyber Monday. Dear God, that's a lot of money. That would be down 4% from last year. It's just not how it works.
It would be like asking anybody, "You're going to try and lose some weight this year?" Like,
yeah, of course I am. I'm going to lose 20 pounds.
I'm going to
put on a bunch of muscle mass and lose weight, and my hair's going to grow back.
That's
too.
my intention.
No, that's not how it works. And I'm going to be 6 foot by the end of 2026, Paul. It's going to be great. We're all going to be really happy about it, and my financial house will be in order. Let's take a quick break. When we come back, a little bit of Fed talk. When we head into this December meeting, investors seem to be quite split on what the Fed is going to end up doing. We'll be talking about why next on the Financial Exchange.
Keep going.
Tucker.
It's this stupid program.
Oh,
I gotta
stupid
reboot it
program.
now.
Okay, well, can
Just
we
give me
play
30
the
seconds.
can
Give
you
me
play
30
the little
seconds.
the little
No,
clock
no.
that we do for you guys?
You can talk. You can
All
do
right.
it. You're a big
so
boy.
to hint at what we were referring to earlier, right now, when you take a look at the Chicago Mercantile Exchange, there is right now an 85% chance of a rate cut at that next December meeting, in spite of Jay Powell coming out and very publicly saying, and then a bunch of his governors coming out and saying that it is not a foregone conclusion. Where was that a few weeks ago, and will they actually end up cutting next year on the Financial Exchange?
Nice.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Your next incredible vacation is a click away, and if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival, taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment, or just go soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your escape now at visitusvi.com. That's visitusvi.com.
Over the course of the last month, with some market volatility, there's been two main things that have been pointed to as contributing factors, and I would tell you that really only one of them matters. But one has been, new suspicions about the AI trade, how much it's going to cost, whether the payoff will come. Second has been changing narrative around where interest rates are going. Fed has cut interest rates twice this fall. They were widely expected to do so again at the upcoming December meeting. There was a month ago, back in October, there was a 92% likelihood that they were going to cut. No, sorry. There was a 95% chance that they were going to cut at that next meeting. A week ago, it was a 50-50 chance. Mm-hmm. And so I don't know how much that contributed to sentiment about markets, but higher interest rates make some investors nervous. They discount their future cash flows when it comes to a company at a higher interest rate, and so it changes valuations. I suspect that the nervousness about the AI trade was a larger contributing factor than interest rates, but I don't think we can minimize the impact of what the Fed has to say about the economy, because they have provided a lifeline on several occasions when things have gotten messy. What has been happening to cause this kind of shift in thinking? One, you did have Jay Powell at the last meeting come out and say it is far from a foregone conclusion that we will be cutting interest rates at the next meeting. Following that, you had several other Fed members that pretty much said the same thing.
Right.
Since then, though, since the last week or so, again, now you've had more Fed speeches, and they have come out and left the door open for that additional rate cut. I myself, sitting here looking at everything, if we are not going to have any new government data on the state of the labor market, on the state of inflation, really on the state of a whole slew of different things, and you've been cutting interest rates into this economy based on the previous data you had, I have a tough time justifying why you would pause now. By any account, right? You've got some fragility in markets very clearly. You've got some nervousness about private credit that's relatively new. And so were I in those shoes today, again, based on the data that we have today, based on the narrative that we are looking at today, I would probably continue with another 25 basis point rate cut. I don't see how, the changing narrative has driven you away from that standpoint. But clearly there are at least some Fed members, and there were some Fed members at the last meeting who said, no, that's really not justified based on 3% inflation where we are right now, and the labor market hasn't weakened yet, so why go lower?
Yeah, there's two paths that they could take here. One of them is the one that you were just sort of alluding to, that you cut rates at the December 10th meeting and then just sort of posture your sentiment to say that the bar going forward is going to be very high for future cuts, that you're really going to need to see a lot of indications that would substantiate more cuts, because this is sort of what you had telegraphed before as to be the policy, is to continue with these rate cuts. The areas of concern out there for people perhaps in the dissenting party that you mentioned on the Fed governor side is that we're in a bit of a difficult situation for the Fed where there is elevated inflation. We're sitting at that 3% level. The Fed's target is 2%. So that's typically an area where you would not be too behind the idea of cutting rates into a more inflationary environment. But 2% isn't a hard and fast rule. 3% is higher than intended. And also on the job growth side of things, in favor of the idea of cutting rates, you had a September jobs report that came out that did see the unemployment rate tick up to 4.4%. The number of jobs added in the month was relatively high, but we know that can be revised down further. So it seems as if all these indicators lead to steady as she goes. It's interesting. I believe, like you had mentioned, it had got down to a 50-50 shot. Then the New York Fed President John Williams spoke on Friday, basically reiterating their prior stances. We're going to move policy down more towards the neutral rate. So that's sort of where we sit on this front. The other alternative would be to not cutting rates would be, hey, leave them as they are and revisit in January under the premise that, hey, we're going to get some more data. But the problem that you run there is over that 7-week span, if you don't get any conclusive data that points in one direction or another, you've effectively, you wasted time. Yeah.
More, I guess, ammunition for the Fed to cut rates. The Conference Board came out this morning with their consumer confidence reading. Not something the Fed genuinely takes into consideration with their decisions. But, again, in the absence of other data, you look for anything you get your fingers on. The gauge for consumer confidence decreased 6.8 points down to 88.7. I've said before, I don't think that these readings on consumer confidence are terribly useful, especially not when comparing them to previous decades. We've talked about how it just didn't make a lot of sense to me that consumer confidence in 2024 was worse than what we were seeing in 2010, right? Like, just on the surface, tough to make sense of those numbers. But what I think is notable about this one, the consumer confidence level dropped to the lowest level since April. What was going on in April? Well, everyone and their mother was terrified of tariffs. How many calls were you getting about, should I buy that car that I was thinking about because I'm worried that Subaru prices are going to go through the roof?
Big time.
This is an interesting term because, again, it's weakening in the face of an absence of, from what I can tell, really bad news.
No, I don't know what you would point to as to why it would be so much as weak as it was in April. That was understandable.
Which is interesting to me because it's the exact same thing we saw out of the markets, right? You saw a turn for the worse over the course of the last few weeks that was not set off by a big news story that we were able to point to, right? I mean, the biggest news story that you could point to for setting off markets were comments from the likes of Sundar Pichai, Michael Burry, and others to say, we're pretty suspicious of this AI trade and where it's going to go. Whereas you took a look at sell-offs in April, for example, it was because we literally proposed 40% average tariffs on every country in the world, and so it completely reshifted the narrative. So I find this reading to be interesting. The other data point that came out just this morning, the producer price index, again, not the most heavily looked at item. Only if it were to surge through uncomfortable levels do I think the Fed would really pay attention to this number. Excluding food and energy, the PPI rose slightly less than forecast from August. It climbed 2.6% from a year ago. Smallest gain since July 2024. I think this is a nothing story. You shuffle it to the back of the deck and say, okay, PPI doesn't indicate any problems on inflation.
Yeah, just for listeners, producer price index is what is the producer paying for a set of goods that they will eventually sell to you, the end consumer. So it often can be sometimes paired with the CPI, the consumer price index data, but that is the one that is far more significant. What are the consumers paying, not the producers?
We have got to take a quick break. When we come back, we're going to have a full market update with Wall Street Watch, and then we are talking Google.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, a lot of people think estate planning is complicated or something they can put off. Can you explain how a joint revocable trust can actually make things simpler for couples who just want to protect what they've built and keep things easy for their family?
Sure. Joint trusts are really so underutilized, but they're really the most important and easiest way to do planning. Many people think of two trusts, right? Splitting everything between a husband trust and a wife trust. Well, this already makes it simpler. If you have just one trust, you can both put your assets in the trust, whether you contribute the joint bank account or the joint brokerage account or the joint real estate and rental properties. It's easy. Just put it all into one trust and you're both trustees. So funding is simpler, operation is simpler, and most importantly, you can actually get a better result for moderate estates from an estate planning standpoint. Because on the first death, you get to cram down all the assets that are in the joint trust to get a step up in basis, whereas if you've separated the assets between the two trusts, you're only going to be able to cram down half as much. And if you do the planning right, you can actually use these trusts to get a double step up in basis when the surviving spouse dies.
Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan. It's called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after yesterday's rally, markets today are mixed as investors react to more economic data points from September. The producer price index mostly came in line with expectations, while retail sales for September climbed 0.2%. softer than estimates of 0.4%. Right now, the Dow is up nearly 0.6% or 264 points. S&P 500 is edging 5 points higher. NASDAQ retreating over 1/3% or 82 points lower. Russell 2000 is up nearly 0.9%. 10-year Treasury yield down 2 basis points at 4.011%. And crude oil down nearly 3% lower, trading just above $57 a barrel. According to the information, Meta is in talks to spend billions on Google's AI chips as Google steps up its efforts to compete directly with NVIDIA. Shares in Alphabet are up again today, another 2.5% higher, while NVIDIA shares are falling over 6%. On the heels of that report, other chip makers, including AMD, are seeing sympathy losses. Meanwhile, Best Buy shares are rising 4% after the consumer electronics retailer hiked its full-year sales and earnings outlook after beating earnings expectations. During the previous quarter, the retailer saw customers upgrade tech devices and splurge on new computers, gaming consoles, and smartphones. Elsewhere, after naming a new CEO yesterday, Kohl's reported better than expected third quarter results with a surprise profit. Kohl's also upped its annual guidance, sending shares in the struggling retailer surging 31%. More retailer earnings after Dick's Sporting Goods beat street expectations for the previous quarter. However, the company announced it will shutter some Foot Locker stores as part of a larger restructuring so that the sneaker company doesn't weigh on Dick's profits. That stock is down by 3%. And Zoom jumping 11% after the video conferencing company beat earnings forecast, while its fourth quarter earnings guidance was also better than expected. I'm Tucker Silva, and that is Wall Street Watch. And if you missed any of our shows this week, you can find them on our YouTube page. We stream the show live every day, but also archive every hour. And all of our most newsworthy interviews, just go to YouTube, search The Financial Exchange, and hit that subscribe button.
I got some tips for you on that YouTube thing, Tucker.
What?
I feel like you could use AI to make all of your hosts a lot handsomer.
We could do that. We could have,
It might
wave the wand, if you will.
Doesn't matter quite as much for the audio format, but if you're trying to push this out on YouTube,
sure.
6 inches taller, stronger chin. I think you'd
stronger chin.
I think you'd really clear things out there.
Just call Tom Brady's plastic surgeon.
Yeah, Again, we don't need to. AI.
Right.
Perfect
Saves us the surgery.
Speaking of artificial intelligence, I want to try and frame this conversation properly. And to start it off, here's what you should know. NVIDIA's stock over the course of the last 30 days is down a little bit over 10% now. It's down 5%, 6% today alone. Alphabet stock, on the other hand, over the last 30 days, up 21%.
Mm-hmm.
Again, the narrative that's been dominating markets over the last 30 days is, what if this AI trade doesn't work out the way we think it does? Doesn't really explain why Google is shooting up by 20% if the people are worried about the AI trade as a whole. So what is Google benefiting from right now?
To try and simplify it as best as possible is investors have realized, particularly with some of the recent announcements that came out today with Meta potentially buying Google's chips, as well as Anthropic, another company out there committing to buy 1 million of Google's chips, that Google is the best vertically integrated business out there within the artificial intelligence space. And let me try and explain that a little bit. So there are different parts of all this artificial intelligence trade. Why we've talked about NVIDIA so much on the show for the last 2 or 3 years is that if you wanted to create a large language model like ChatGPT that many of us have probably used or messed around with, NVIDIA's chips have been the best game in town to do that by far and away.
And there was really no evidence that anybody else could compete with it. We had one story in February or March of this year with DeepSeek, a Chinese-made AI tool coming out where we suspect that it might have been trained without using NVIDIA chips, but then there was also cross stories that, well, no, they probably just imported them illegally and trained it using them anyway. NVIDIA's chips have been the only game in town.
70% gross margins that they command on these. They really had I won't say a monopoly, but they had significant market share.
Yeah.
What has happened more recently is this idea that there could be room for another competitor. Google, and the story that Tucker mentioned on Wall Street Watch, and its chips have been pretty similar in terms of performance, and also the large language model that Google has. Gemini 3 came out recently. That is built upon Google's chips, performed equally as well, or some people have argued better than ChatGPT. So when
frankly, there's been this debate. Hey, is Gemini 3 better than ChatGPT 5.1? I don't have an answer for you.
No.
I mean, there's been a lot of people that have been testing the two and trying to get some comparable answers and see which one's better. Frankly, even if it is remotely competitive with GPT 5.1, that's probably enough for investors to get excited.
It's a really big deal. And so
it clearly is.
When I go further along this vertical integration is, okay, NVIDIA's got the chips, it's got the data center, but NVIDIA doesn't have a large language model at all. It doesn't have ChatGPT. Google has Gemini, the large language model. It has the chips we just spoke about. They also have the data centers and all of the cloud infrastructure. They also have a bunch of users on their platform. They still have 90% market share in the search space. Oh, by the way, they have 3 billion users on Android. And they have another 3 billion users who use Docs and Gmail and Maps and other interfaces out there that they could integrate some of this artificial intelligence in. They're just well positioned compared to some of its competitors.
If this ends up being a bubble that bursts, as Alphabet's own CEO Sundar Pichai put it, Google... Can we just call him Google?
Yes,
I'm so frustrated by this. Google will not avoid problems if this is an AI bubble that ends up popping. What I think people find really attractive about this business is, like you mentioned, they're fully integrated within the AI space. They have a massively profitable non-AI business to fund all of these endeavors.
That does $385 billion of revenue a year.
They also have this, this solid business, by the way, that can continue to partner with Apple and get paid massive amounts of money by Apple. They might have the best generative AI tool out there. And by the way, on top of all that, if you are really excited about automation and robotics, they also happen to own the far and away best U.S. self-driving car business out there.
Right.
Not saying you should be excited about that. Like I think there's some serious questions as to how that ends up working, but they are the leader in the clubhouse there too. And so I think what's been happening is if you are an investor that's been getting nervous about the pure play, what happens if NVIDIA is commoditized, you've turned around and said, oh, well, let's check out this other business that, even if AI ends up being a commoditized business that is not that valuable, Alphabet still exists. They've still got a massively profitable business elsewhere.
And they're a geyser of cash flow. They are, in terms of their competitors, they're still spending, don't get me wrong, $91 billion to $93 billion in terms of capital expense this year, but their debt load relative to some of their peers out there is lower just because they're able to spit out so much cash.
Remember 60 days ago when they argued in court that their business
So
was
I want to cover that too, because it's hard not to mention that after this recent decision that we had, what was that, late September, that decision came out?
Explain one more time. So there's a monopoly case brought against Alphabet that attempted to break them up, and they were declared a monopoly by the judge, but in their defense, they argued that AI was going to ruin their search business and really take a big chunk out of their core way of doing business.
Right. The Department of Justice says you're a monopoly. They come out with a decision that basically...
Not just the DOJ, the judge that ruled on the case.
And the judge too. And they come out and basically give what is a very light slap on the wrist in terms of any sort of punishments to Google at all. And the only reason that Google was basically able to dodge a more stiffer ruling, I feel, is because of the threat of artificial intelligence to a search business. And here we sit 3 months later, me giving this whole diatribe as to how they're so well positioned to potentially take the biggest market share of artificial intelligence because they're so well vertically integrated. That's allowed to stay intact because of this ruling a mere 2 months ago.
Let's take a quick break. When we come back, we're going to turn to a completely different subject because according to a recent poll, a majority of Massachusetts voters say they support ballot measures reestablishing rent control in Massachusetts. We're talking rent control next on the Financial Exchange.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Megan's Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Your home is more than just a place to live, it's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done.
We talk a lot about on the show how it seems like we just need to have these moments every 20, 30, 40, 50 years where we retest things that were pretty dumb and proven to be stupid. And we'd say, oh, it's been a little while. Everybody that had tried that was dead now. So let's try it again and see if it works this time. A poll of 500 likely Massachusetts voters found that more than 60% of those indicated they would back measures that would reestablish rent control in the Commonwealth of Massachusetts. Back in 1994, rent control was banned across the state at a time when only Boston, Brookline, and Cambridge had it in place. And it appears that the ballot initiative at least got enough signatures in Massachusetts to put rent control back into place, or at least allow cities to push rent control. I don't know if this would mandate rent control across the entire state, but I think it actually would based on the language that I read in the ballot. It's a ballot. There's a lot of questions about the legality of the ballot, of the signatures, and obviously the advertising that would be run against or for the ballot leading into it. But here is what I have read about this ballot initiative. The ballot would cap annual rent increases at 5% per year or CPI.
Okay. Higher of the two.
Mm-hmm. Newly built apartments would be exempt from rent control for the first decade after construction. And if you were in an owner-occupied building with fewer than 4 units, you would also be exempted from this. So basically nobody's exempt. There are very few exemptions out there. If you own one apartment on this ballot initiative and it's not new construction, you are going to be subject to rent control.
I thought it was less than 4 units.
If you're living in an owner-occupied
unit.
If
you live in it.
Yes.
Okay.
Yeah.
Got it.
So if you live in your building and then you rent out 2 other units in the building, you are exempt.
But
if you
not
don't,
if you have a 3-family.
Nope.
This is such a bad idea.
Let's talk about why it's a bad idea. First things first, there are no sorts of exemptions for buildings that are completely rehabbed. Right? So I go in and I'm looking at my place in Somerville that I've rented out for 30 years and I want to go pour $500,000 into it to modernize it because, what was a pretty rough area 30 years ago is now a growing area with new shopping available and all sorts of, gentrification going on. There's no way I'm doing that because I can only raise my rent from $1,000 a month to $1,000. Help me do the math. $1,050. No, not going to cover that. The other thing I'm going to do, if I'm worried that, even if I don't think that rent should go up by 5%, if I'm worried that I can never raise it more than 5%.
Every year it's going up 5%.
Every year it's going up 5%.
Yeah.
Furthermore, okay, so we just talked about, there's now a very small incentive built in for you to maintain your places and improve upon them. So like you've seen in other places that have rent control, you're going to have a stock of housing that is new and exempt from rent control and nice and pretty. You're going to have another stock of housing where getting your landlord to do anything is going to be fighting tooth and nail because they can't charge you market rent. It's also going to prevent areas of the state that might develop into, there's been a big push into Worcester, for example, bringing Worcester, more people commuting from Worcester to Boston and more people relocating there because of the cheaper cost of housing. It's going to pause development in cities like that because developers aren't going to go in. It doesn't matter that there's a 10-year exemption from this because at the end of the day, you're still facing that cliff where at the end of 10 years, you are subject to rent control again. I'll continue to lay out my arguments concisely as to why I think this is a stupid idea. But frankly, I think voters in Massachusetts are feeling probably a bit empowered after the millionaire's tax that passed and quite honestly had less of an impact on business and the state of things in the Commonwealth than I would have anticipated. I talked about publicly that, hey, pretty small state here. If I'm a small business owner and I want to relocate to New Hampshire, I can do that fairly easily. Quite honestly, the millionaire's tax has brought in way more revenue than even the lawmakers estimated it would. And so we have not seen that impact yet. What I think voters are missing here is that it takes decades for these policies to be fully felt. And we are creating an environment in Massachusetts that is, less and less business friendly, I guess is how I would put it.
The rent control piece, to spin back to that, these voters, whoever on the side of this, are not anticipating the unintended consequence that this is going to have.
They're just not informed.
They're not.
I get.
It just sounds
the
like a free lunch. It sounds like this great deal. Oh, you'll have to pay lower costs. This is going to work out in your favor, but doesn't recognize the economic realities with real estate development. And ultimately, this is going to lead to shrinking supply. And by the way, the vacancy rate in the Boston area is one of the lowest in the nations. If you're looking for an apartment, this does not help that at all. This does not encourage people to build more multifamily units and to build more options out there. Forgetting, you can argue 10-year exception, but that's just not going to do it. It won't justify the long-term time horizon of real estate investors, whether they're a conglomerate, a bigger institutional investor or not. It's just frustrating.
Yeah. When you try to cap prices, I know that not everybody studies economics, not everybody studies this, but when you cap prices, the result is shortages.
And lousy options, too, is what's going to happen. You're going to have these dilapidated buildings that people aren't going to want to invest to make nicer.
Yeah. So I don't own rental property anywhere. I genuinely would be taking if I did, I would be genuinely taking a very hard look at this and saying,
I'm out.
Is this a market that I can still rely upon for predictable income and future growth if something like this passes? And I don't really know how to assess the likelihood of it passing at this point. We're still a year away from this election and this happening, and we've seen how public viewpoints have shifted on this stuff. But I don't know. I mean, doesn't this kind of feel a little bit like the sentiment around the millionaire's tax? Like, it won't affect me, and I get I get it. We could use the help with prices. I don't know. I don't feel like this should play as well as the millionaire's tax did with voters, but
it can grab some low-hanging fruit of people who aren't informed. You're right.
We shall see. But yeah, it looks like rent control back on the ballot for the first time. Probably the first time ever, but back in consideration for the first time in a few decades in the state of Massachusetts. Quick break. A lot more to cover in the second hour. We'll be right back.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network. Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Owning Real Estate in Retirement. Mike, for someone who wants to own multiple properties in retirement, maybe a warm weather and a summer property, what do you end up doing as far as, trying to negotiate and navigate that decision?
Well, it's a lot of questions to answer. How much time are we going to spend in one place versus another? Where am I going to be a resident? If I am, leaving between two different homes, where do I feel comfortable being a resident? I get this question all the time. How much will I get in tax savings, for instance, by moving to a no-income tax state? And what ends up happening, though, sometimes is they make that decision based on income tax and don't realize where a lot of the cost savings comes, which is estate taxes. And so if I'm going to own multiple properties, where do I intend on actually making my residency? And will I be able to commit to that for the long term is an important one.
Another piece there, look, at a certain point in everyone's life, that travel and moving between two places and even maintaining two places becomes challenging. When do you typically see those kinds of conversations being navigated?
For most folks, I see it in the 70s and early 80s. That's when this stuff starts to change for a lot of people, but ultimately it's customized to each individual, and you might be able to afford one scenario if you're willing to rent out your property for a period of time.
Sure.
It really comes down to customizing for your situation.
Our guide this month is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001 or going to armstrongadvisory.com. That guide again is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. It's Mike, Paul, and Tucker with you on a Tuesday here where markets are staging a bit of a recovery. We've got the S&P flat, the Dow's up 0.6%, NASDAQ still off 0.5%. A lot of that being dragged down by NVIDIA, whose stock price today is down nearly 6% out of some concerns coming from AI world generally, but less of the, I guess, general suspicion about AI and more some specific NVIDIA concerns. We did get a retail sales report this morning. It showed a small but still a gain for the month of September. Remember, we're going to be getting data releases here that are a couple months out of date now. So the September report was not great, but also not terrible. You still saw an increase in overall sales. Restaurants and bars saw a good uptick, whereas you saw a drop in all sorts of retail, sporting goods, clothing, and other categories. You had a consumer sentiment report that came out this morning from the Census Bureau that reported the weakest consumer numbers since April. And you had a producer price index report that came out this morning that was fine. Are we going to call it fine?
Yeah, I think so.
It was not concerning in any way. Did not indicate anything that I could see that would lead to marginally higher consumer prices. And so once again puts the Federal Reserve as we head into December. Again, the next big event on the calendar here is the Fed's next meeting. They will be having their press conference and rate decision on December 10th, so roughly 2 weeks from now. There's currently an 83% chance that rates come down by another 0.25% at that meeting. In terms of a few areas related to interest rates, when we take a look at 30-year fixed-rate mortgages, which the Fed does not control but does influence through their policy and statements, we've got the average 30-year fixed now sitting at 6.32%. That's according to Mortgage News Daily. Compared to this time last year, we were sitting at nearly 7% on that same measure. So pretty big decline in interest rates over the course of the last year. And that's about all that I would focus on when it comes to markets. We have this pending U.S.-Ukraine negotiation that seems like it's not seems like it's not moving much, but you do have oil prices falling, I think, in regard to that peace deal. Oil prices off 2.75% this morning. Anything else catching your eye, Paul?
No, small caps having a little bit of a rally here, up about 1.33%.
We alluded to one other story, which was the NVIDIA sell-off that we are seeing. To put it plainly, Paul, why would you guess that we are seeing such a steep sell-off for NVIDIA stock today?
Potentially Google encroaching on NVIDIA's dominance and significant market share in selling chips that are utilized to power large language models and the beginnings of the most prevalent artificial intelligence that's out there on the market right now. Google had not previously been in the market really of selling the chips that they constructed themselves that are called TPUs, but more recently, whether it's this news story that we covered this morning regarding Meta potentially using some of the chips by Google in its data centers in 2027 or renting some of them as early as next year, and I believe Anthropic buying 1 million from Google. This was not something that was really prevalent with Google's business model. That is thwarting the confidence that investors have in NVIDIA's stock and the dominance that it has shown over the last few years here.
By the way, Google stock or Alphabet stock is now turned negative.
It's cooled off, yeah.
So, look, I don't know where this goes next, but if we get a month out and Google's Gemini is the front runner for best generative AI tool out there, and they provide evidence that it was primarily trained on these chips and they have the ability to ramp these up, it is a significant threat to NVIDIA's business in a way that we haven't seen from some of the other competition that's been mentioned out there, like AMD and others. Just leave it like that.
Yeah, it puts pressure on a business that has had really high margins for NVIDIA. That is atypical for a long period of time with chips. If you look back historically, usually there is some competition creeping up, and we're seeing some of that now.
Okay, so I want to move on to our dumb story of the day from the folks over at Barron's. Sorry, Barron's. But they have an article, How the S&P Could Hit 8,000 in 2026. And frankly, you know what? I'm just going to admit it. I didn't read the article. Nice. I didn't read the article. I don't think you should read the article either. I'm just here to do everyone a service here, but let's just do some quick math. How could the S&P 500 hit 8,000 by the end of next year? It would have to go up by 20%.
Yes.
Is that insurmountable? Is that impossible?
No, it's not impossible.
In fact, since 1928, the S&P has gone up by at least 20%, 34 times.
And in 23 and 24, I believe.
That's a third of the time.
So you're saying
a third of the time.
So you're saying there's a chance?
If you were to roll a dice and get a 1 or a 2, that's about the likelihood that you would see this happen next year. So if we're going to talk about random chance, then that's where we are. What a preposterous question to even ask.
Yeah, let's explain why it is so preposterous, because making market projections for next year, this will happen, and we'll cover more of these on the show, I'm sure, in the next month, because every analyst out there at the major financial institutions is going to be asked to do it, Goldman Sachs, Morgan, Merrill, etc. And it is just the biggest fool's errand out there. It's just so difficult to project. I mean, you can analyze some of the economic threats and reposition portfolios, but just picking a number.
Does the AI bubble pop or not?
No one knows.
If no, then you very likely could get to 8,000. Can we just leave it there? Like, just a silly question to even pose. 8,000 on the S&P 500 is less than 20% away from where we are right now. That is not an insurmountable task. It would not be crazy for that to happen. It would be potentially surprising because we are going on 3 years of absolutely breakneck pace of S&P 500 gains, but crazy, impossible? No, absolutely not. And as I just mentioned, for the last 100 or so years, in about a third of the cases, the market's gone up by more than 20%. So this wouldn't be crazy. I don't think it's particularly likely, but it's not crazy at all. And I don't see any value by any bank that, by the way, all the banks go out and do this. They put together their predictions for where we get by end of next year, and they're all useless.
Yes.
They're all useless. They have to revise them 15 times based on where the market goes, and they don't actually base any of their businesses on where the S&P is going to go. They don't position any assets or plan anything based on where the S&P forecast is going to bring them, so it's useless, and investors should ignore it, in my humble opinion. Anything else on the subject? Okay, I'll put it in my Festivus stack.
Get the
We'll
fire
talk about it again
extinguisher
in a
out.
couple of weeks.
God just burned down Barron's.
Let's take a quick break. When we return, we're playing a little bit of trivia next on the Financial Exchange.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Magens Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com. Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, let's do a little bit of trivia here on the Financial Exchange. On this day back in 2020, Caitlin Clark made her college basketball debut with a stat line of 27 points, 8 rebounds, and 4 assists. Clark would go on to set many college basketball records, including most points of all time. So our trivia question today is simply, which college did Caitlin Clark play basketball for? Once again, which college did Caitlin Clark play basketball for? Be the fifth person today to text us at 617-362-1385 with the keyword trivia along with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 with the correct response and the keyword trivia will win that Financial Exchange Show t-shirt. See complete contest rules at financialexchangeshow.com.
Paul and Tucker, I have good news and I have bad news when it comes to housing. Which one do you want
Bad
first?
news. Bad news first.
All right. So the bad news is that home sellers have not yet become accustomed to the 2025 and what I expect will be the 2026 housing market. They are still latched onto a price point that they got fixated on either when they bought their home back in 2022 or when they saw their neighbors sell their home back in 2022, and it's just not happening for them. I'm going to use Florida as the use case here just because it's, an easy place to pick on. But June of 2022, the median listing price for a home in Florida hit $493,500. Since then, it has come down to $425,000. If you watched your neighbor sell their home in the exact same neighborhood 2 to 3 years ago, they are going to get a lot more for that home. They will have gotten a lot more from that home than you will be able to get today. Mm-hmm. That is the case in Florida. It's probably the case in places like Texas, Louisiana, Arizona, and other locations as well. I think it's, particularly severe in Florida. But just to point out for a minute here, that same median listing price in June of 2019 across Florida was $330,000. So long as you didn't buy in 2022, you should still have made a boatload of money on your home and can sell it at a big, steep profit and are certainly not underwater.
Of course, but there's always the psychological impact of seeing, the other numbers that were in the market in years prior. Florida is a great example to pick for this. In general, it does seem like across the nation, though, even as we focus on Florida, that there is a heavier percentage of listings that are seeing some sort of price cut. And the piece that's outlined in the Wall Street Journal here makes a fair point that if you're looking to sell your home quickly, then trying to find the right price for it, a price that you don't have to cut down, is going to allow you to sell it much faster. But I kind of scramble in my head is just because you picked a lower price and it sells faster versus a higher price that sells for less, are you in the middle of those two, the right price versus what was too high, but then you sell slightly higher than the right price? I'm not sure if I can reconcile that exactly. Do you pick that up when I'm putting it down?
I do. I think what a realtor will tell you is if you'll end up being more damaged by putting it at the higher price point, because if a buyer sees a home that's been out there for 90 to 100 days on the market, it's a sitting duck. They assume that there's a problem and they are going to beat you up on price as opposed to if you can create an environment where there's a competitive bid. Now, on the other hand, if you price that thing 15% market value below market value, you might get enough bids to raise it up to the fair market value, but you also might just have discounted yourself and psychologically set all the buyers to that lower price point. So I think there is a happy medium there. But the good news for the market overall, again, comparing to pre-COVID is what I like to do when it comes to housing. In October of this year, across the nation, there were 1.1 million properties for sale. This includes condos and single-family residences. In October of 2019, there were 1.2 million. We're pretty close. I mean, not that 2019 was a screaming buyer's market, right? There was still a lot of competition for housing. I certainly didn't feel like I was getting the deal of a century when I bought my own home in November of 2019. But compared to today, it now looks like it was a heck of a deal. And the point that I would make is nationally, we're about back to where we were in terms of total inventory available for sale there. What is not happening is dramatic price cuts, and I think that is largely tethered to the fact that people are still psychologically attached to those price points that they were able to get and their neighbors were able to get over the course of the last 3 years. And in some markets, that's still doable, right? I was speaking to somebody just yesterday. They've been planning on selling their home once they were able to get into the retirement community they wanted to get into. Finally, they were accepted into the retirement community because the space opened up. They listed their home for sale, had an open house over the weekend, 10 offers on Monday morning, and they selected the highest offer on Monday, and they're going to close very quickly. So,
Greater Boston area?
Yes.
Yep.
Obviously, there's a big difference between real estate for sale in New England and the northern half of the Midwest. But yeah, there are markets that are still testing those prices that you have seen. But, again, nationally, we have yet to come back. Even on the national basis, the median listing price is not up to the peak that we saw back in June of 2022. So people get tethered to those prices. And from what, I'm not a real estate expert, from what I understand, though, you're doing yourself a disservice if you get too tethered to those prices. And especially, it's one thing when it's your primary residence, but when it's a rental property, you just have to apply cold, hard math to it, right?
Yep.
If I sell this thing and turn around and invest it elsewhere, how much can I make as a replacement to that? And if you're getting a bad deal on the rent, then you got to lower the price and just move along. Because I've spoken to a number of people in Florida, let's just say, who are failing to do that math, and I think just waiting for that comeback, I just don't see it coming. Don't see it coming.
It's hard to the extraneous forces.
Maybe I'm wrong. Maybe all of New York City is about to flee the new mayor there and move to Florida. That was the theory of somebody that I know that was talking about buying a bigger home in Florida, and they're like, we got to rush to this because all the New Yorkers are going to move down. I don't know. I'm not seeing a lot of evidence of that.
I don't know.
I don't see a lot of evidence of that. McKinsey is explaining why AI won't take your job, even though it can automate 57% of all U.S. work hours. So we're going to continue to see every story published about this, and I will acknowledge for a moment here that AI is a new emerging technology and different from other technologies insofar as it mimics human behavior more than any other technology I can think of. But we've got a few centuries worth of history here to judge, and every other time a new innovation has come along, whether it's the steam engine or the printing press, we have not been followed by 2 decades worth of high unemployment and general terrible economic malaise, I guess. I don't know what new jobs are going to come about, but I have a sense that it's not just going to replace 10% of the U.S. workforce.
I agree with you. Ultimately, as human beings, we crave social interaction. I just am not ready to reach out that far to a mass elimination of jobs.
Even if it's not the human element of all this, the desire to be around people that causes all of it. Every time we've had a big technological innovation, it has opened up new economic activities.
Right.
You create more productivity, thereby there's more wealth, and thereby there are new innovations, new technologies, new areas of the labor market that did not previously exist because of that technological advance. And I just really struggle to believe that this is going to be the first technology in human society that breaks that trend line.
I'm with you.
I don't get it. In fact, there's others that are arguing, no, we're actually going to have a labor shortage because Americans are so bad at STEM that we're not going to have enough people to work in this AI sector to train these models and actually get them up and running because we're so bad at science and math here in the United States. Quick break. We'll have the trivia winner and a full market update next on the Financial Exchange.
bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all 3. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, for couples who already have wills in place, why might it make sense to look at a joint revocable trust, and what can it do that a simple will can't?
Yeah, this is important because a lot of people believe that wills are an estate plan, when really a will is a won't. I've said it many times. It won't avoid probate. It won't reduce estate taxes. It won't protect assets from the nursing home. You're going to need some kind of trust to do that. So that's the most important reason why a will is not enough. Then you need to think about, well, what kind of trust are you doing? Well, in this case, we're talking about joint trusts. And boy, folks, these are so underutilized, but they are really powerful for moderate estates. And today, moderate estates are, below 15 million with the exemption as high as it is. So you can actually make it easier for folks. Put all the assets into this trust. You can jointly put your brokerage accounts and real estate in the trust. It's simple. You don't have to split assets between 2 trusts. Ease of operation, and it's going to reduce estate taxes, avoid probate, and provide a bloodline plan for your family, even to the extent where if you want to protect it from future creditors and divorces of the kids, you can do that in the trust as well. And the will won't do any of that.
Cushing & Dolan have been helping families like yours for more than 40 years now. Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan called The Simplicity of Joint Flashpoint Revocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in mixed territory following yesterday's rally as traders react to more economic data from the month of September. The producer price index met expectations while retail sales climbed 0.2%, just below estimates of 0.4% right now. For markets, the Dow's up over 0.7% or 332 points. S&P 500 is up about 0.25% or 15 points higher. NASDAQ down about 0.25% or 53 points. Russell 2000 is up over 1.4%. 10-year Treasury yield is down 2 basis points at 4.008%, and crude oil down just over 2% lower, trading at $57.51 a barrel. According to the information, Meta is in talks to spend billions on Google's AI chips as Google steps up its efforts to compete directly with NVIDIA. After initially adding to its recent rally in early trading, Alphabet stock is now up only 0.5%. NVIDIA shares are now down by 4% on the heels of that report. Other chip makers, including AMD, are seeing sympathy losses. Meanwhile, Best Buy shares are rising 4% after the consumer electronics retailer hiked its full-year sales and earnings outlook after beating earnings expectations. During the quarter, the retailer saw customers upgrade tech devices and splurge on new computers, gaming consoles, and smartphones. Elsewhere, after naming a new CEO yesterday, Kohl's reported better than expected third-quarter results with a surprise profit. Kohl's also upped its annual guidance, sending shares in the struggling retailer surging 34% now. And Dick's Sporting Goods beat Street expectations for the previous quarter. However, the company announced it will shutter some Foot Locker stores as part of a larger restructuring so that the sneaker company doesn't weigh on Dick's profits. Dick's Sporting Goods stock is up over 1% now. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question, which college did Caitlin Clark play basketball for? That would be Iowa. Bob from Griffin, Georgia is our winner today, taking home a financial... What?
Out of the way, Bob.
There you go. Okay, thanks for that. Taking home a Financial Exchange Show t-shirt. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Tucker, congrats. Big day for Kohl's, man. I'm happy for you.
I know. Every time.
Huge Kohl's
Paul's
fan.
on the show.
Brings up
Kohl's is in the
obsession with
news.
Kohl's. Yeah. CNBC has a piece today, Paul. Cash can feel safe, but it doesn't grow your wealth, a portfolio strategist says. Well, I'm going to debate that because I am on Bankrate's website right now, and I see no fewer than 12 separate banks that are willing to pay me 4% or more on my cash. A little bit tongue-in-cheek here. Nonetheless, why do we as financial advisors spend so much time focusing on our clients' cash and trying to largely minimize it? It's not to say people should have no cash at all, but I think frequently you and I come across people that we work with who are sitting on entirely way too much. How does your approach to cash, I guess, change as clients' lives change?
Yeah, so part of it has to be built on their financial plan and whether they've amassed enough cash to be invested as conservatively as they are to withstand the fact that inflation looms as the largest threat for anyone who has a significant pile of cash.
Right. Year-over-year inflation is running 3%. So if I'm doing the absolute best and earning 4%, real earnings here, I'm making 1% on my cash right now.
Exactly. And so I had a meeting with a prospective client recently who had all of their money in cash, a significant sum, $400,000 to $500,000 in cash, and had expenses on a monthly basis of about $4,500 a month. And so if you kind of extrapolate that, let's say it is, $500,000 collecting 4% interest on it, you're pulling $20,000 off of your $500,000 plus some Social Security, gets you pretty close to the 50, right?
Sure.
Sounds like a good deal. The problem with that is just what you mentioned before, is that this person's rent is not going to stay at $2,400. Well, maybe if Boston puts in the rent control, then she might be in better shape. But the expenses on her regular living expenses for groceries and other items, it is not going to stay at that fixed, $4,500 a month or $5,000 a month. So the conversation I had with her is, I understand that you're averse to risk and the fluctuation of your assets makes you uncomfortable, but the current situation that you have in place may be tenable today, but I can assure you it's not tenable going forward, because inflation is going to make that lump sum, if you just have it invested in cash, not worth as much as it is today in terms of real dollars.
Yeah, I say it over and over again too, folks. Most people that I meet, they're most concerned about a stock market crash. It's the biggest item on their list when they think about their financial well-being is, what if the stock market crashes? And easily the biggest risk to their financial future is not a stock market crash. It's usually, what if inflation runs 2 percentage points higher for the rest of your life than it has for the last 3 decades?
Right.
Easily a way bigger risk to most people that I meet with is that inflation just eating them alive over the course of their retirement. And, stock market, maybe it does average returns or slightly below average returns, and suddenly you cannot afford the lifestyle that you had become accustomed to. Ultimately, you have to have where I always go back to with clients is, look, you have to hold enough cash for you to feel confident that I can stick with the investment plan that your investment advisor, am building for you. And so if it lets you sleep at night, then you've got to do it. But, at least try and find a bank that's going to pay you more than Bank of America will on their cash. Sorry to pick on you, Bank of America, but I am a customer, and you don't.
Me as well.
You don't have any savings accounts that pay me any cash. No. So ultimately, that's what's most important. But, there's lots of alternatives to consider there. Like, if I've got dead cash not working for me, are there at least CDs that I can look at, or U.S. Treasuries that, I can look at as a solution there? For many people, it's like, hey, if I'm going to have dead cash anyway, would I be better off with insurance of some kind? Could I beef up my life insurance or my long-term care insurance? And the tricky part of this, too, is it all changes depending on how old you are, right? Like, you're 45 years old, you got 3 kids at home that you're trying to put through school, and you're a dual working household where either of you could lose your job. That's a completely different cash need than if you are 59 and a half, still working, kids in college, and suddenly have access to your IRAs without being penalized. So it's important that you just speak with somebody about what the right allocation of cash, bonds, stocks, other assets to have is going into these different stages of life. Because like I mentioned, even just a year, like 58 versus 59 years old, can dramatically change how much cash you should be sitting on in the event of an emergency because of things like access to retirement accounts. And people frequently fail to recognize it and therefore miss out on a bunch of asset growth that they could otherwise be achieving. If you have questions along those lines, hey, how much cash should I be holding for this stage of my life? What are the real risks that I face as I go into that next stage of life? Give the Armstrong Advisory Group a call. Number's 800-393-4001. You can book a time for us to call you back at armstrongadvisory.com. But that number, once again, for your free consultation and free chat is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
You guys excited about buying your next car on Amazon?
Oh, yeah.
I'm not fully closing the door on it.
No?
No. It interests me.
I have never bought a car that I didn't first test drive.
Sure, you can go test drive it somewhere else and then go buy it at Amazon.
Yeah.
Just kind of like you do if you go into a Dick's Sporting Goods or a Best Buy or something. You look up the price while you're there, see the product in person, try on your sneakers, and then order it on
All right,
wherever.
so then a few questions. One, can Amazon actually get me the car that I'm test driving at the Hyundai dealership cheaper than they're willing to give it to me at the Hyundai dealership?
I mean, how can you say
Because if
no?
not, then it's a non-starter.
I think that's their only route here.
Right?
Is if it's slightly cheaper or some sort of incentive. Yeah.
In which case, why does?
But if you're the car manufacturer, why would you allow them to list it cheaper? Or how how are they getting that cost advantage?
Imagine your dealers coming back to you and saying, I have this MSRP listed at $43,500. I'm trying to negotiate a sale, and the customer keeps opening up their Amazon app and showing me the exact same car in the exact same color with all the same features for $41,500. I don't know that they're going to be able to deliver on vehicles at a cheaper price point. I hope they do, but I don't see why anyone would go for it.
Particularly when there's some competitors in this space too. I don't know.
I mean, the customer would go for it. Again,
the customer would.
I would buy the car from Amazon if they're going to offer it to me for a cheaper price point. But if I'm the dealer in this case, which is, by the way, in the U.S. auto system, the entity that has all the power with the manufacturers, they're going to say, screw you. Unless you're willing to completely cut off your dealer supply. I don't see how this works. It's one thing when you're Amazon and you can create a proprietary USB cable that you can sell for half the price of the one at Best Buy because it's off brand and not mentioned, but that's not what you can do here. You're not going to come up with the Amazon car. I don't know. I'm not sure this is going to be successful.
Well, Hyundai has been the number one or the car that started it with the Amazon, and now Ford recently had a announcement. I don't know if it's new, but it's used cars. I don't know when that goes into effect.
If it's used cars, then that's a different story. That actually works because there is no definitive price point for a used car. So like Carvana. So I mean, if that's the case, then Carvana's screwed.
Yeah.
But
But
I don't know.
For me, the touch and feel, the test drive thing is really not that important. I was thinking back at some of my cars. I've sat in them, but haven't really drove them around.
What if it were a used car? I don't think I'd be willing to buy it because that's.
I have a relationship with if not for a relationship, family friend relationship, then yes, I would be more focused on it.
Yeah, I mean, with a used car, I know how Carvana works. Like you got the 7-day trial period, but you still have to get the insurance. It's still gonna be a giant pain if you have to return the thing because you don't like it. I would not be willing to do so on a used car, and I don't understand how the new car business would work. So I don't know.
Text out of the 508 says Amazon has volume and has repeatedly taken a loss to corner the market.
Agreed. Right. Absolutely agreed. So I think they would be willing to take a loss on this, and I think on the used cars, they'd be willing to put Carvana out of business for it. But on new cars, I just don't know if the manufacturer is going to be willing to bankrupt their dealers in order to go do this.
Texter adds that they let you try on shoes for free. The same thing is coming for cars.
Yeah. All right. Well,
I hate buying cars, so if Amazon can make that easier too, then
anything is
to make
better
the car buying
than the current process of buying a car,
right?
Because it's dog crap, and it needs to change. And all you dealers need to get your crap together because it's an awful, awful, awful process.
Stop going to the back room to your manager.
It's awful. My mother-in-law just spent for a used truck. Spent literally 7 hours at the dealership to get the best possible price.
Wow.
It's what are we doing?
It's like a hostage situation.
It is. It's like who's going to bend first? It's just awful.
Say that when I bought our new minivan, it was actually a very pleasant buying experience. That was in part because they had me completely over a barrel because they had the only new Sienna available for sale in the entire state of Massachusetts. So there was a price, and I was paying it, but it was very pleasant.
I'm sure it was.
Let's take
coffee too. Yeah.
Let's take a quick break. When we come back, a bit of Stack Roulette is next.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Magens Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Your home has been the center of your life for years, maybe decades. But as you enter retirement, its role starts to change. Hi, this is Mike Armstrong from the Armstrong Advisory Group. The focus shifts from what your home means to how well it supports your lifestyle. For many people, the space that once made sense for a busy family now requires more time, energy, and money than it should. Retirement is about simplifying, choosing a home that's easier to maintain, closer to the people and services that matter, and better aligned with how you want to live may be the right move as you head into your later years. Our new guide called Owning Real Estate in Retirement tackles a number of different issues that may help you turn your home into a source of flexibility and freedom, helping you plan for the years ahead with comfort and confidence. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This year's DAV 5K was another incredible success with over 1,500 runners and walkers, all supporting the Disabled American Veterans Department of Massachusetts. The race results and photo galleries are available to see, and if you didn't have a chance to participate but would still like to support our great American heroes, please visit dav5k.boston. Early access registration for next year's race is now open through November 30th, so just a few days left. Discounts are available, so head over to dav5k.boston and register today. That's dav5k.boston. And before we hit Stack Roulette, just a couple follow-up texts on the previous conversation regarding the car buying process and Amazon being, involved in that scenario. One text says Amazon's going to get into the insurance and registration process as well. Another texter said, if I'm buying a used car, I need to get in it and smell it, which I completely agree with.
Yeah, that's
point,
a real
actually.
problem for a used car business. It's
like the Seinfeld
cigarette
episode.
smell that you get every once in a while. Yeah. Like that's just not easy to get out.
Or Jerry couldn't get rid of the smell of BO in his Saab.
Yeah. Big problem. The insurance and registration piece, I guess I don't fully understand what goes into all of that, but I know you have to do all of that as part of the registration piece. The interesting question to me would be, does Amazon want to insure cars? I don't think so. That was the piece of Tesla's business that was always like out there as the big compelling item was, Tesla's, because the self-driving features are going to be so good at driving that the insurance costs are going to go down. And so Tesla was going to build out this own insurance business to capture that lower risk. And the exact opposite happened. It wasn't that there were more accidents. It's just that the cars were so technologically forward that every time there was an accident, the insurance cost was through the roof. And
because of all the replacement costs.
Yeah, all the replacement costs, the battery damage that could be done, like all those things were really, really expensive in Teslas. And so the whole theory was, hey, we'll be able to insure these cars for less because of self-driving. And the exact opposite happened to it. What do you have for us for Stack Roulette, Paul?
Your turkey is cheaper this Thanksgiving. That's about it.
Do I need to buy one of those like now? Do I still have time to thaw it?
I don't know about that.
Yeah, you still got time.
Just microwave it.
Okay.
It'll be fine.
Several estimates of Thanksgiving meal costs that listed out. There's two different ways of looking at it. President Trump had said that it's 25% cheaper than 2024 Thanksgiving dinner, but apparently, according to a piece in Bloomberg, this was just 15 items compared to the traditional 29 items last year.
So if I buy half the stuff, then it's 25% cheaper.
Correct.
Okay.
The consulting firm Deloitte estimated that the cost of a home-cooked meal of turkey, stuffing, mashed potatoes, sweet potato casserole, green bean casserole, dinner rolls, cranberry sauce, and pumpkin pie was up 0.6% over 2024. But
right, so basically prices are
slightly up.
Somewhere between down 5% according to the American Farm Bureau and up 2 to 3% according to Wells Fargo.
Correct.
So somewhere between down 5 and up 3.
Either way, we know it costs money. That we have confirmed.
Got
that.
it, folks. You can take that to the bank. Prices are somewhere up or down around 8% of where they were last year. I hope that's useful information.
Quote me on that.
Yeah.
I hope that's really useful information for you as we close out the program today. Taking a look around at markets, we've got the Dow and S&P strongly in positive territory now. Dow up 0.9%, S&P up 0.4%. The NASDAQ still holding on to some losses here. We've got the NASDAQ down 16 points, a little bit less than 0.1%. Oil was moving earlier on rumors of an agreement, at least from the Ukrainian side, for a peace deal. Oil prices still today down to $57.56. That's off 2% compared to yesterday. We'll be back at it tomorrow for our Wednesday program. Hope everyone traveling for Thanksgiving does so safely and has a lovely Thanksgiving. Happy Thanksgiving, and we'll be back at it tomorrow.